Good day, ladies and gentlemen. When is that joke never gonna not get old? For those who don't know, me and Messin have this friendly who can drink more water competition, so I just like to prove to the people that I am vastly more hydrated than Messin. But aside from all that, for those who are wondering why I always drink water in the beginning of the videos, let's talk about some very important goings on with Ethereum, folks. Ethereum is in a make it or break it territory. In this video, I want to discuss what I'm looking out for to understand if Ethereum has more downside potential. I'm going to run through some of the major technical factors and off-chart factors that are likely to affect Ethereum greatly moving forward. So if you want to understand what I'm looking out for to understand what Ethereum could do moving forward, definitely like and subscribe and hit that bell icon to be notified of new uploads, because come bull market or bear market, we're here to stay, folks. We're going to bring you the latest and greatest in crypto news and analysis. Now, starting off with Ethereum, we have fallen below the 200 daily EMA and SMA. This is bearish. This is bearish confirmation. We're having 2 days of rejection off these moving averages, folks. Just to show you guys what could happen when we find rejection, we break below high time frame moving averages such as the 200 daily EMA and SMA. Let's take a look at Bitcoin. Bitcoin, during the beginning of its major crash, temporarily found support on the 200 daily EMA, crashed below it, came back up to retest it, got rejected, sell-off continued. Relief rally to it. Where did it find rejection? Off the 200 daily EMA, folks. Significant high time frame support. If we break below it, then turns into significant high time frame resistance. And unfortunately, it looks like that's what's playing out with Ethereum right now. So basically, the longer Ethereum is below 2,000, the more bearish ETH is. Now, it's not all completely doom and gloom. We do have significant support at around this $1,800 range with some previous tops here that we're currently finding support off of for the moment. But we also have a cluster of volume coming in at 1,800, not to mention the 618 Fibonacci retracement from the macro bottom to the all-time high right here. So we do have a range, a cluster of strong resistance, strong support from kind of 1880 to, I would say, around 1700. So that really has got to hold as support for Ethereum. If this range does not hold as support, if we get driven down now, which since we're finding rejection off these moving averages, is a likelihood that we could retest some of these lower regions at around 1800. If buyers fail to come in here, and if we lose 1700, then folks, I could see ETH going to 1400, I could see it going to 1300, I could see it even going to 1200. But it's not just the percentage down that's what we have to worry about. It's also the length of time. If we start dropping below some critical levels, well, I mean, we could go into a correction and consolidation phase for weeks, months, maybe even years. Now, I'm not saying that's a guarantee, and I don't mean to alarm anyone. I just really want to express the possibilities, and I want everyone to be aware of the worst case scenario. Is the worst case scenario most likely? Is it guaranteed to play out? Probably not, but I want you guys to be aware that if we do enter a true bear market, we potentially have a year to a year and a half of correction and consolidation ahead of us. And so if we want to know if we're entering a true bear market, well, we got to look out for some critical inflection points. And the 200 daily EMA and SMA on Ethereum need to be flipped into support if we want ETH to be bullish. The longer we stay below this, the longer we can correct downwards. And right now, short-term support is the 782 Fibonacci retracement from this bottom to this top here. So if we put in a lower low here, we're going to test that $1,700 region, and if buyers don't come in there, which they have throughout most of Ethereum's recent major sell-offs, look, major sell-off here, buyers continually came in at this $1,800, $1,700 range. If we can't get on top of these moving averages soon, we're probably going to retest it and see if the bulls are truly in charge. If the bulls don't come back here, folks, then the bears are in charge, and they could be in charge for a long time. Again, guys, it's not all doom and gloom, but let's run through some of the major factors I'm looking out for to better understand Ethereum. One of those other major factors is Bitcoin. Whether you like it or not, we gotta understand Bitcoin, because Bitcoin leads the market. Looking at Bitcoin, the daily candles is testing previous support here at kind of 31,500-ish. These previous daily candle closes where we're finding support for the moment. That has got to hold. If it doesn't hold as support, we're going to test these lower regions here. And again, folks, we're going to see how this region, these wicks, these long wicks, it means that whenever we crashed, it got bought up quick. So historically, this 31,000, 30,000 range, whenever we drop below here, buyers came in, but a lot of people are losing interest. We're breaking below support. We're constantly finding rejection, putting in lower highs. Will buyers come in now? That is the question, folks. I'm looking out for the weekly chart here for Bitcoin, because if we look at Bitcoin here, which Bitcoin leads the market, I'm trying to identify a critical inflection point. And I do believe that the 50 weekly EMA and 55 weekly EMA are inflection points, because we've held these two moving averages as support all throughout the crash. And so if we get this weekly candle closing below these moving averages, well, that's a new factor that we got to input into our equation when considering what's going on in this market, and another factor that weighs heavily towards the bears, because this is bearish confirmation. This is a new bearish element, just adding on top of the bears case. So folks, 31,500 has got to hold. We hopefully should get weekly closes above these things. If we don't, I will begrudgingly practice risk management and move some percentage of my portfolio into stable coins. What percentage I haven't figured out yet. But if we get this weekly close, the next 3 days and 2 hours at the time of recording, below these moving averages with Bitcoin, that's likely to negatively affect Ethereum and the rest of the altcoin market. So that's why I'm talking about Bitcoin in an ETH video, because Bitcoin affects Ethereum. Now guys, I mentioned how it's not all doom and gloom. So let me kind of tell you guys why it's not all doom and gloom. The off-chart fundamental factors are very bullish. The total amount of Ethereum held on exchanges is constantly decreasing, so supply is decreasing, and demand is either stays the same or is increasing over time, while price goes up. And folks, supply has been dramatically leaving exchanges. This is a bullish catalyst. As well, recently, the number of active addresses on Ethereum surpassed Bitcoin for the first time in history, suggesting the use case of Ethereum. Every day there's new dApps being created, new yield farms, NFT protocols on Ethereum being created all the time. And so a bet on Ethereum is a bet that blockchain technology will continue to have utility moving forward, and that's a bet I'm willing to make. So fundamentally, Ethereum is super sound. Adoption, technology, improvement is going one direction, which is towards overall improvement, but it's just the technicals, is the price action that's quite bearish. And again, guys, the market can act irrationally for a long time. Something else we got to be aware of: the London hard fork is coming August 4th. Roughly August 4th. Sometimes these major improvements get delayed. What is the London hard fork? Well, the London hard fork is a group of EIPs. What are EIPs? EIPs is how changes come to Ethereum. So EIP 1559 is one of the most highly anticipated improvements in Ethereum's history, and it's coming August 4th, hopefully maybe sometime around August. So what is this thing? EIP 1559 proposes a new transaction pricing mechanism that will instead create a base fee for each block. The blockchain will burn the fee, reducing the overall supply of Ether. This effect will create deflationary pressure on the cryptocurrency. So right now, the total cap on the Ethereum supply, there is no cap. Right now, the current supply is like 115 million-ish, and there's no cap. But with EIP 1559, there will be a cap. The supply will actually decrease over time, and will decrease quicker the more transactions and the more the network gets used. And if ETH is a bet on blockchain technology continuing to have use case, I bet you that over time people will continue to use this thing. I think we're so early in terms of real world adoption and use case of folks. So look, tons of bullish kind of catalysts out there, increasing amount of people staking on ETH 2.0. I think this is actually old news. The real number is, I think, over 6% today. But folks, look, the fundamentals for Ethereum are sound. It's the technicals that are bearish, and it's also Bitcoin that's bearish. Whether we like it or not, Bitcoin affects the market. In my opinion, Ethereum fundamentally, philosophically, should be completely decoupled from Bitcoin, because their use case are completely separate. But due to liquidity issues with market pairings and market sentiment, Bitcoin being bearish does negatively affect Ethereum. That's why I'm analyzing Bitcoin in an Ethereum video. So folks, just to kind of summarize a bit here, what I'm looking out for to kind of start to de-risk and understand if the potential of an extended correction and consolidation phase is increasing is, number one, Bitcoin getting a weekly candle close below these moving averages. It's not the end of the world if we get a weekly candle close below these moving averages. it's not a guarantee that we'll enter a year-long bear market, but the likelihood of that increases if we lose these moving averages. So next 3 days, if we get a weekly candle close below this, bearish. Ultimately, if we get daily candles closing on a lower low, I will then also practice risk management, because again guys, whenever we had significant crashes, buyers came in. So if Bitcoin reaches 30,000, 29,000, puts in a lower low, the key factor is how much time it spends here. If we look at, I think at the 12-hour chart, we didn't spend more than 12 hours on one of these lows. So if we put in a lower low and spend a lot of time there getting a daily candle closing below 30,000, 29,000, then that is bearish confirmation, makes it more likely that the bears will win over and drive the price down to maybe $26,000, $24,000 for Bitcoin. And if we start getting these daily candles closing on lower lows, if we get that weekly candle closing below support, then I will begrudgingly practice risk management and move into stable coins, because if Bitcoin is losing support, then that is another catalyst that could drive Ethereum even down further. So in the short term, ETH I think needs to hold 1860, 1850. If it doesn't hold that, we're testing 1700. If buyers don't come in at 1700, folks, in that case the downside potential is substantial. We can go to 14, we can go to 13, we can go to 12, and pretty quick. And it's not, again, not just the time, it's not just the percentage we could go down, but it's also the time we could spend in these lower regions. Ultimately, folks, like and subscribe, hit that bell icon to be notified of new uploads, because while these scenarios are possible, they haven't happened yet. So I don't think there's any need to panic yet. I just want to describe to you guys some of the possibilities in this market. I want to be very real with you guys as to what I'm looking out for, what specific levels, when I'll practice risk management, and all this good stuff. So folks, like, subscribe, hit that bell icon to be notified of new uploads, and stay hydrated.